This Balikbayan's guide to investing is something we designed. This is weeks in the making. This is something we designed to tackle the roadblocks you, our dear OFWs, get to experience. I'm also going to help you identify which investment options in the Philippines would be best suited for you. So again, my name is Andoy. I'm the business dev and market education head of FirstMetroSec. FirstMetroSec happens to be the stock brokerage arm of Metro Bank, the best managed bank in the Philippines. And we happen to be the Philippines' best broker back in 2017, 2018, and 2020, just last year. Just so you guys know, I am licensed to guide you every step of the way. I'm licensed by the Bangko Sentral ng Pilipinas. I'm licensed by the Securities Exchange Commission. I'm licensed by the Philippine Stock Exchange, and I'm licensed by Bloomberg to basically talk about anything and everything capital markets. The reason why I'm very passionate with what I do, and the reason why I'm here with our partners from Federal Land is because OFWs need assistance. You need help. And when I say help, this is something that we offer to you guys just wholeheartedly, because you guys don't know what your options are. That's why a lot of times OFWs fall victim to investment scams, because you'd like to make the most out of your money. You'd like to invest. You'd like to start investing. You'd like to start growing your money. But that's the reason why you also fall victim to investment scams, because you don't investigate before you start investing. And that's one main point that we'd like to drive at. Investigate before you invest. OFWs need assistance because you don't have budgets. You don't plan when it comes to money. Your priority is for you to be able to send something over back in the Philippines. You don't prioritize saving for your own personal needs. And that's a problem. And that's a problem we're going to try to solve. OFWs need help because OFWs are having a difficult time saving. But the problem is, according to the Bangko Sentral ng Pilipinas, OFWs, 90% of OFWs can't save. 90% of OFWs can't afford to save because, again, they prioritize spending. They prioritize remittance instead of saving for themselves and for their future. And talk about investing, according to the Bangko Sentral ng Pilipinas, a good 97% of our OFWs aren't even investing in our very own stock market. So I'm going to try to share with you everything I know to get you started the right way, for us to guide you in your investing journey. After everything said and done, after spending so much time away from your relatives, away from your family in the Philippines, according to the Social Security system, 97% of Filipinos retire poor. So imagine all that time you spent studying and all those times you spent away from your family, away from your loved ones. By the time it's all said and done, SSS tells us that 97% of us has this chance of retiring poor. And that's why it's very important for us to make our money, make more money. That's why I'd like you to change the way you look at money. Money is not just intended to be spent. Money is not just intended to be remitted. If managed the right way, saved the right way, budgeted the right way, invested the right way, money can make more money. And that's what we're going to talk about heavily over the course of this webinar. So I'd like you to understand that you have a lot of weapons to choose from. You have deposits, you have bonds, you have stocks, and of course, you have real estate on top of the leaderboard when it comes to financial gains. No? They're arranged in that fashion because of their risk, return, and time horizon features. The lower the risk, the lower the return. The higher the risk, the higher the return. You also need to understand that there's time horizon involved. There's time involved. Time horizon talks about the length of time you, as investors or as potential investors, are willing and able to let go of your money for it to work harder for you. So that means the longer amount of time you invest, the longer amount of time you keep your money in real estate, the longer amount of time you own real estate properties, then the higher it should pay you back. That's essentially the idea behind this. I'm also responsible. We're also equally responsible to inform you guys that these are legitimate investment outlets. they're legitimate because they're heavily regulated by government or perhaps private entities. Why is it very important for you to understand these things? Because just in case, if and when you have issues, if and when you have complaints, if and when you have problems with these investment outlets, you know whom to get in touch with. You're not just going to go online and send a private message to isumbong mo kay Tulfo because you have concerns. No, this is the way to go for your problems with deposits, bonds, stocks, real estate. You know whom to get in touch with, and that's very important. That's a powerful piece of information because again, OFWs, a lot of OFWs fall victim to investment scams. That's why it's very important for us to start our learning program, our webinar with this bit of information. We're also going to talk a lot about saving and investing, but the problem is a lot of OFWs are having a difficult time saving and investing because they think, Andoy, I'd like to save, I'd like to invest. It's a no-brainer. But the thing is, I can't save and I can't invest because I'm only receiving so much. I'm only receiving so much, and the next part of my problem is I almost always end up sending everything back in the Philippines, back to the Philippines, because I'm responsible. I'm a responsible head of the family. I'm the breadwinner, no, and that's where budgeting comes in. You can't save, you can't invest if you don't have a budget. A budget essentially gives you some sense of organization, because a lot of times OFWs, whatever OFWs receive, you guys almost end up spending everything for your balikbayan box, for your pasalubong, for your remittance. And in the process, you don't end up saving. Whatever it is that you receive, pretty much you spend everything that you don't have enough left for you for savings. And again, that's the problem. So my counter proposal here is for you to tweak this equation a bit, that every time you receive something, you're supposed to take a certain percentage out of your sueldo, out of your salary, and then keep it for you for future proofing purposes, for emergency funds, for investment purposes, and then whatever's left, then that's intended for you to spend for yourself, for your groceries, for your rent, and then of course for remittance back to the Philippines. If you keep on spending less and less and less on unnecessary expenses, that means you're going to have an opportunity, more and more and more and more money for saving and investing. And if you keep on saving and investing, you're going to create multiple sources of income because you get to invest in stocks, you get to invest in bonds, you get to invest in money market funds, you get to invest in real estate, you get to buy real estate properties, which will eventually give you more and more and more passive income. So aside from your sueldo, aside from your salary, you get to earn money from rental. You get to earn money from interest rate income from deposits. You get to earn money from coupon payments from bonds. You get to earn money from dividends because you have dividend paying stocks. So this is essentially my takeaway. It's going to be you and you alone. You can't hire somebody to save for you. You can't hire somebody to invest for you. You're going to have to force yourself to save and invest. And again, the more important thing there is before you even save and invest, you need to budget. How do you budget? My proposal is for you to follow the 30-50-20 strategy. That every time you receive something, always see to it that 30% is devoted for future proofing. Assemble an emergency fund first. How much is an emergency fund? It has to be worth 6 to 12 months your regular expenses. So that means if you are spending on a regular basis, let's say 10,000 pesos, just to make it easy for us to do math, no? 10,000 pesos, that means your emergency fund should be worth 60 to 120,000 pesos. After saving every single payday 30% for future proofing for emergency fund, and then you get to complete that 60,000 or 120,000 pesos, the very next payday your 30% for future proofing. Stop depositing for your emergency fund. Stop depositing in your emergency fund account, because that's a signal for you to start investing. So make sure you have an emergency fund before you even start investing. Investment funds, we call that growth funds, because it is going to be intended for a long-term commitment. This is the sum of money you intend to uh, keep on making more money. This is you starting to create multiple sources of income for you to be able to start funding, for you to be able to start acquiring real estate properties, and for you to be able to eventually support yourself through retirement. After the 30% future proofing funds, make sure you devote 50% for needs, for food, for shelter, for utilities, and even for insurance. Of course, no brainer. This is something you need for you to survive. You can't you can't possibly be a breadwinner. You can't possibly be productive, no, when it comes to providing for your family if you don't get enough food, if you don't get enough nutrition, if you're not living in a secure shelter. So it's very important that you keep yourself, give yourself these necessities. And then after that, only after making sure that you've devoted 30% for future proofing, only after making sure that you've devoted 50% of your money for needs, then the remaining 20%, that's the amount of money you may send over back to the Philippines for remittance, for pasalubong, for balikbayan boxes, for your shopping, for extra dining, for entertainment, for hobbies, for recreation. Again, nothing wrong. There's really nothing wrong with providing for our families, for our relatives back home in the Philippines. Nothing wrong. It's actually embedded in our culture that we're very generous. We care a lot about our family. But in order for us to do that long term, without having to sacrifice our very own welfare, the 30-50-20 strategy should be able to help. Now, how do you guys get started? It's good to start off with perhaps stocks. Stocks provide you with the opportunity to co-own already successful businesses. You no longer need to establish a business ground up because you are buying already established businesses. And these are not just businesses, these are publicly listed corporations. But the problem is in the stock market, you're supposed to choose from about 300, close to 300 listed stocks. And 300 is a lot. It's overwhelming. So my quick suggestion is for you to look into blue chips or the index stocks. These are the all stars, or these are the Gilas Pilipinas of stocks, the best of the best. 30 of the best, most stable stocks in the Philippines. They're there for a reason. They're there not because they're famous. They're there not because they're owned by multi-millionaires. They're there because they are historically proven to weather economic downturns. They happen to be the biggest in their respective industries. They're top of mind when it comes to branding, and most especially when you talk about investment vehicles, they're consistent when it comes to dividend payments. Dividends essentially are profit sharing. You're eligible to receive profits from the company you co-own because again, you are a co-owner. You co-own that company, so you're eligible to receive something if and when that company declares dividends. And again, the good thing about that is stock market investing allows you to co-own already successful businesses for as little as 5,000 pesos or $100. A lot of times people shy away from investing because they think investing is only for the rich. Gone are the days when the rich are the only ones getting richer. Because gone are the days when you need a lot of money for you to start investing. Again, for as little as 5,000 pesos. Stocks provide you with a lot of earning opportunities. It provides you with an opportunity to earn by way of capital appreciation. When you buy low and sell high, it's capital appreciation. Stocks also allow you to earn money by way of dividends. Again, because you are a part owner of a listed corporation, pandemic or no pandemic, you get to receive dividends, especially if you know which stocks are okay to buy. But the thing is, it's very important to understand that stock market investing allows you to own a business without having to run that business. You are a part owner, but the people behind Jollibee, the people behind Metrobank, the people behind GT Cap, they're the ones running the show for you. They're the ones making the decisions for you. So you still keep your day job. You get to keep doing what you love doing. But the good thing about that is you are invested. Your money is making more money. Even if you are on leave, even if you are on vacation, even if over the weekend, you know for a fact that your money is working. You know for a fact that your money is making more money. What if I'm so busy that I don't have time to monitor the stock market? Are there any other opportunities out there for me? Well, I have mutual funds for you. If you think you're busy, then mutual funds will allow you to gain access to money market, the bond market, and stocks in just one go. That's how mutual funds work. Mutual funds essentially pool money of investors with mutual objectives. They get managed by full-time fund managers. They get invested in approved, publicly disclosed investment vehicles. And then when they generate returns, they get passed back on to investors. Why do you even need to consider investing in mutual funds? Well, it has a law. It's established under the Investment Company Act. Mutual funds essentially give you ownership of mutual fund companies represented by net asset value per share. Mutual funds are legit. Even before you start investing in mutual funds, you can actually investigate before you start investing by visiting www.sec.gov.ph, just so you get to check if the mutual fund company is registered or if the mutual fund salesperson selling products to you is a licensed salesperson. It's super cheap. Just for you to be able to start investing in mutual funds, similar with stocks, you just need 5,000 pesos. There are even mutual funds which allow you to start investing for as little as 1,000 pesos. It allows you to get access to higher yielding outlets that normally you by yourself can't access. It allows you instant diversification because it gives you ownership. It allows you to possess 10, 20, 30, up to 40 individual securities just by buying one fund for as little as 5,000 pesos. It's very liquid, so that means if and when you decide to sell your position, even if there are no buyers in the market, the mutual fund company will buy it from you. Most importantly, lalo na sa mga investors, no, it's exempt from capital gains tax. So you basically make the most out of your money. And another thing worth considering is you are outsourcing the decision making to professional fund managers. So they're basically the ones monitoring the market for you, doing the decision for you. If you guys are still confused between stocks and mutual funds, let me provide you with a brief, a short comparison. With stocks, you are the driver. And alam naman natin, if you are the driver, it will require a lot of focus from you because your eyes should be on the road for you to, avoid collision. But the good thing about that is you have full control. You know where you can stop if you need to stop. You can speed up if you need to speed up. But with mutual funds, you have a driver. But the thing is, your driver doesn't listen to you because your driver is your fund manager. Your fund manager will pretty much monitor the market for you, do the decision making for you. But the good thing about that is it will require less focus from you. So you get to enjoy life. You get to do what you like doing. You get to play PlayStation 5. You get to go on vacation without having to monitor the market. And another thing is the driver chooses the route and the destination. So you don't have a say as to where your money will be invested in. Because between you and your fund manager has a little bit of an edge when it comes to expertise because that's what they're supposed to do. That's what you're paying them to do. Another thing I'd like you to understand is if you are having a difficult time choosing between stocks and mutual funds, you can actually invest in exchange traded funds. In the Philippines, there happens to be only one, and it happens to be ours, from the GT Cap group. It's the First Metro Philippine Equity Exchange Traded Fund, or FMETF. I'm not here to sell you FMETF. It's just that it's the only one in the Philippines, so I just can't help but to mention the name. So FMETF or ETF is essentially a hybrid between a stock and a mutual fund. It's a mutual fund listed in the stock market. So an ETF essentially allows you, FMETF in particular, remember our blue chip stocks, remember our all stars, remember our Gilas Pilipinas of stocks. If you'd like to buy all of them, you're going to have to spend about 730,000 pesos thereabouts. And that's a lot of money, especially for beginners. That's a lot of money. What FMETF did was they put everything, all of these blue chip stocks in one basket. That basket is now what we now call FMETF, or exchange traded fund. And that's something that you can buy for as little as 1,500 pesos. So it's very economical, it's very affordable, especially for OFWs or having a difficult time saving and investing. So instead of you having to shell out 700,000 pesos by buying blue chip stocks, you may buy FMETF for as little as 1,500 pesos. Why do you need to consider investing in FMETF? Well, because it's number one, it's affordable, it's super simple. It's again a mutual fund listed in the stock market, and it's very tradable. If you buy ETF in the morning and you've gained enough money in the afternoon, then sell it. There's no such thing as a minimum holding period. And for your confidence, our team was awarded as the best emerging market ETF and the best emerging market ETF manager. Simply, not necessarily because we're the only one in the Philippines, because this is for the emerging markets category. Let's now go to real estate. People are having a difficult time looking into real estate as a form of investment because of its high barrier to entry. And it's understandable. If you're looking at it from an investment standpoint, the number one barrier would most probably be its high barrier to entry. Because again, for you to be able to buy a real estate asset, you're going to have to spend a lot. You have limited access to capital. If you don't have enough money, then you're going to have to apply for a real estate loan, a personal loan, whatnot. You're talking about maintenance. If and when you start acquiring real estate properties, you're going to have to make sure that you devote money for upkeep, for maintenance. There's also this thing that they call concentration risk, that if you happen to have a lot of real estate properties in one area, your risk is too high, especially with problems arising from that particular area, from that particular industry, from that particular side of the metro. You also look at liquidity risk, because again, for you to be able to sell real estate properties, you need to be able to find willing and able buyers with the capacity to pay. So these are things I'm sharing with you, not to discourage you from investing in real estate, but to make you understand that it's actually a commitment for us to invest in real estate. But the good thing about that is we have what we call Reits, or Real Estate Investment Trust. This is a brand new asset class, so to say, because a real estate investment trust basically it's a fusion between a real estate and a mutual fund naman. So remember kanina, yung FMETF, or exchange traded fund, is a fusion between a stock and a mutual fund. REITs, on the other hand, is a fusion between a real estate and a mutual fund. Essentially, real estate investment trusts allow Filipinos, allow OFWs to invest and co-own income-generating office buildings, malls, hotels, hospitals, parking lots, all sorts of income-generating real estate assets for less. It requires minimum capital. It provides you with instant diversification, because you're going to be able to buy a lot of real estate properties across different classifications. It's professionally managed. Kung sa mutual funds, you have fund managers. With real estate investment trusts, you have admin property managers, and you have administrators, you have third-party valuation partners. And the good thing about that is real estate investment trust companies are required by law to distribute 90% of their distributable income as dividends. And based on the first two real estate investment trusts in the market, they are giving out dividends as often as every quarter. So every 3 months. Every 3 months, you get something from your real estate investment trust investment. And again, that pretty much speaks a lot about liquidity. That if and when you decide to sell your real estate investment trust, then you can just sell it in the market, just like selling mutual funds, just like selling stocks. So instead of you having to shell out millions up to billions of pesos for you to buy buildings or malls or hotels or office spaces or hospitals or parking lots, very impractical, especially for beginners, no? Especially for investors, beginning investors. You don't have billions right from the get-go. REITs allow you to start investing and co-owning income-generating real estate in assets, real estate properties for as little as 3,500 pesos. And again, I'm not kidding. All right. So the good thing about that is we've just talked about quite a number of investment outlets for OFWs. Why do you need to think about investing? Well, because it allows you to make your money make more money. It allows you to create multiple sources of legitimate income. Para you're not just relying on your sueldo alone. You get to eventually make money from interest, from coupon payments, from dividends, or from rental income. It allows you to crisis-proof and even future-proof your finances and your family. And most importantly, it also helps you help the Philippines grow and even recover. So for OFWs, a lot of times you might think, Andoy, for me to be able to start investing in these outlets that you've just introduced us to, do I need to go back? Do I need to fly to the Philippines every so often, fly back to the Philippines every so often, just for me to start investing in deposits, just for me to start buying bonds, just for me to start getting stocks, just for me to start investing in real estate? No. Because of the fintech revolution, you may start investing in money market funds, retail treasury bonds, bond funds, stocks, exchange traded funds, equity funds, and even real estate investment trusts without having to go back to the Philippines. All made possible by FirstMetroSec, because we provide you with one online, very powerful online account for all your investment needs, whether it be stocks or mutual funds or unit investment trust funds, bonds, exchange traded funds, or even REITs. We allow access to peso and dollar denominated mutual funds from our partners, ALFM, ATR Asset Management, FAMI, PhilM Asset Management, PhilEquity, and Sun Life. We also allow you, especially our OFWs, to fund your accounts conveniently by way of Metro Remit, Metro Bank, PS Bank, BDO, BPI, Land Bank, and Union Bank online bills payment facilities, credit card funding for as long as you have a MasterCard or a Visa credit card, GCash, Coins.ph, NCCC booths, and 7-Eleven Click booths. And soon enough, Pay Maya for, again, convenient funding options. We're eco-friendly because we are completely paperless from statements to account opening. So account opening is very easy. Again, regardless if you are an OFW or residing here in the Philippines, account opening is as easy as 1, 2, 3. Number one, visit www.firstmetrosec.com.ph. Just so you know, this is only available 6 a.m. to 2 p.m. during trading days. 6 a.m. to 2 p.m. Philippine time during trading days, because we're upgrading our account opening portal. Step number 2 is complete the online form. What's your name? What's your username? What's your password? Where do you live? What's your source of income? All the works. It's just going to set you back 5 to 10 minutes. And lastly, step number 3, upload your documents online, and then that's it. Anything and everything you need to learn about FirstMetroSec, simply visit www.firstmetrosec.com.ph. Please subscribe to our YouTube channel and like our Facebook page, FirstMetroSec. Follow us on Twitter and on Instagram at FirstMetroSec. Just the same, I'm leaving my email address for you to jot down, abeltran@firstmetrosec.com.ph. I'm on social media as Andoy Beltran. And I'm also the guy behind Let's Invest PH on Facebook, Instagram, and on YouTube. So let me remind you guys, let me remind our kabayans out there that if you keep on spending and spending and spending and spending money, if you keep on remitting and remitting and remitting and remitting money, which are used unnecessarily, you're going to keep on losing and losing and losing money. But if you start becoming wiser if you start managing your expenses better, if you start following a budget for you to start saving and investing, you're going to soon find out that your money has the potential to make more money, to help you get to where you want to go. So again, this has been Andoy Beltran from First MetroSec.